Hello and welcome back to the Note. Well, we've had a wild day in world markets. It started in China, where Shanghai saw a big sell-off. That was followed by frantic efforts by the Chinese authorities to bodge up markets once more. That scared people in Europe, where there was a sell-off in stocks, and here in the States, where the S&P had a very broad-based sell-off, down about 3%. Every economic sector was down some 2%. Only 3 stocks were up for the day. Plainly, we are heading to a retest of the lows that we saw last week. That's not particularly surprising. What perhaps is rather more alarming is what's going on here in the oil markets. This is a measure of 10-day historic volatility in the Brent crude contract. And you can see that volatility on that measure is higher than it has been at any point since the financial crisis. Quite alarming, but not surprising. Today, the Brent crude price, after rebounding almost 30% in barely a week, has dropped about 10%. Now, there's no way to explain that from the fundamentals. It's obvious someone somewhere was caught out of position. It's numbers like that, it's moves like that that show that there's a risk of a financial accident, which is why people are worried. If we take a look at the fundamentals, the big new data for the day is the supply manager surveys. These are held around the world, with the idea being that any number above 50 is showing an expansion or growth, any number below 50 shows contraction or recession. It's an attempt to allow for comparative analysis. On that basis, you can see, obviously rather concerningly, that China has dipped below 50. Perhaps more surprisingly, the US has also dipped quite sharply, with the result that the Eurozone, despite all the concerns about Greece through the summer, has now actually overtaken it. Don't think any of this will have an effect on the Fed. We need to wait for unemployment data on Friday to see something that could really change their decision on interest rates. Finally, one more thing I'd like to show you, because I think it's important, is emerging market currencies. The Brazilian real has dropped to a new low against the dollar. The ruble, which you remember slipped into crisis at the end of last year, is also now very closely approaching those levels it hit then, thanks largely, of course, to the oil price. A fall in emerging market currencies adds to the risk of a broader financial crisis. In general, volatility like this, yes, it's scary. Perhaps, though, it's not surprising after volatility had been held so unnaturally low for so long.